Hey there, I'm gonna try to wrap this and document this under 5 minutes if I can, but at most 10 minutes, right? Showing you how I traded on expiration date with options. Um, Weekly options expire on Friday, and on that day, prices for contracts are much cheaper compared to Monday or Tuesday. And the only thing we need to watch out for is to make sure that the strike price that we buy is gonna be in the money by the time it ends, by the time it expires, or before it expires. Regardless, if it expires in the money, the system is gonna switch over and convert that into cash. Right? Just like the way I did it here was I bought a strike for 320. At the end of the day, it ended up at 320.70 something, which is above the strike price, and I still gain maybe 200% because my entry price at this point here was only, if you look at the right corner, only $22. I remember doing it for $22. I had to walk away at this point, but I know it was coming, so I just let it expire. But if I didn't let it expire and I watch it like a hawk, which we should, I could actually come in here and sell it for 160 minimum, right? Up to 195 because that's the receding candle here. But the other thing is I can also scale up buying two contracts here at 22 times 2 is 44. 44, I could actually sell it for 300 or more, right? Depending on the risk level, my account is only so small that I don't want to risk a lot, and that's why I only do one single call most of the time. But if I showed you here, uh, this is the actual transaction that I pay for, 22, right? The strike is 320 at 245. And then I let it expire for 95. It converted into cash, right? But the main thing was making sure that the stock price gonna go above the strike price that we bought for. So how do I do that? How do we make sure? First of all, we need to look at the VIX, right? Like I explained, if everybody's trading up, we need to go ahead and trade it with them. We need to trade with the market, right? If everybody's buying, we need to go be a buyer. If everybody's selling, be a seller. You can be a short seller if you want to, right? So that's one way. The other way is to understand when people are coming in to buy, right? So let me show you real quick. Most of the short sellers, right, want to be selling at the top here because they borrow shares. They sell right quick at the top, and then they have the need to come in here on the low end to buy, to recover, to give back those shares. The main idea is always buy low, sell high. Short sellers sell high and buy low. That's all it is. And then investors will come in and scoop the bottom and sell high. If we can do those buy low, sell high successfully many times, then we're good, right? That's the main idea. And then we need to be trading what we call the top active, most active stocks, right? Just like in Nvidia. 250 million shares being traded that day, right? Tesla is 1 million, 100 million, right? Look at the ask price, 320.74, and the bid is 320.72. Not that much difference. And it also correlates to the options. For example, ask price and bid price was very different here because it's aftermarket, but during when it was active, it should be one. That's the market, and it shouldn't be too much difference. That way, if you are in a bind, if the market moves against you, And if you need to get out right quick, you hit this flatten button. You're gonna not lose a lot because the price didn't differentiate a lot. That's the beautiful thing about it. But if you were trading Moderna or something like that, like nobody wants to trade that for right now, then the price is like, hey, 100 right here, but 50 for the bid. And when you flatten out, it's probably going to take the bid, and you're just bite yourself in the butt. Um, that's one of the many mistakes that I made. And hey, we make mistakes and we learn from it, right? But anyways, have a trading plan too. The trading plan for me is that if I miss out all this happens to me elections day, right? Donald Trump, President Trump got reelected, and Elon Musk, right? It took only 1, 2, 3, 4 days to come to 360 from 250. Right? That is the potential of the stock. If we were to hold only $200 or $300 here worth of one call, boy, we'll be making thousands, right? We'll be making thousands out of hundreds, thousands out of hundreds. Just like the way I did. I made 22 into 100, almost 100 because it's like 95. But anyway, the trading plan is that we need to be understanding the potential, right? And then we need to be active on the third day and beyond, not necessarily on the first day or the second day, because look at the peak here. Peak, sell, right? We can actually day trade this if we have the stomach to risk it coming down on the next day, but usually came up. We can omit this day because we're going to start again on this day because it's a little higher. Top, bottom, lower, top, lower, bottom. 1, 2, and on the third day is the lower pre-market, and everybody's coming in here. Everybody's coming in here buying it out. So that's how I know, hey, I need to be active. And we do need to understand, hey, the short seller's coming up here, right? Sell, come down here, buy low, sell high, buy low, sell high for us too. So that's how I find most of the indicators via the VIX and with the trading plan and finding the entry points, ideally before the mid VWAP here.